I always had this conspiracy theory about the stock market. I could be wrong, but I think they all kind of know what they're doing. When something comes out, they buy the shit out of it, drive the price up, and then when it goes up to the price they want, they sell it, take money off the table, and they have their own system of making money. Okay, I really believe that. And I don't think they even communicate with each other. They don't have to. They just all know that, yes, IPO comes out, everybody's emotional. Ooh, it's SpaceX. He's a trillionaire now, blah, blah, blah. That thing goes through the roof to 220, and it's all hype. There's nothing. The problem I have with the stock market is it's not logic-based. If you look at their income, there are companies that the stocks go through the roof based on speculation of the future. Okay, there's so many companies that don't make a dime and their stock keeps going up. Am I right or wrong?
Right.
I don't believe in that. I mean, yes, it's just a whole nother world that I can't be in. If I was in that world, I have to be in that office every day while the stock market's open, trading like I've done.
You don't have to. You just
when the stock market's not open, I got to be doing research.
You just buy an index fund, and you average 6 to 8% a year.
Right, let's say
20 years.
Well, not necessarily. Index funds go down.
They do.
What about airlines? Airlines are getting crushed right now.
Yeah, but the
price of fuel, they're going out of business.
But if you look at the global stock market, like a big fund that covers the global stock market, even if airlines go down, something else will take its place.
Tell us a fund to invest in.
VTI, VOO, the Vanguard Index Funds.
All right. You're happy with it? You recommend it? I believe it. They got tons of people behind that making the decisions. They're experts.
They might have them invested more aggressively in a lot of tech. The Mag 7. I'm just saying an index. Like, I wouldn't even be doing that.
I've lost money on BlackRock or Blackstone. One of the two.
Probably BlackRock.
Because they had some fund that, was speculative, too speculative on startups.
But if you owned BlackRock itself, the company itself has done incredibly well.
It's true. If everybody should do their homework and get their comfort zone and invest where they want. But there's no way that I could sit here and start buying individual stocks on a daily basis. It would drive me nuts.
But
I have to totally.
But here's what you're doing.
My real estate portfolio will go down.
Your muni bond, because we're invested in the same one.
Nothing. That's a piece of.
But
it's a walk in the park.
But I'm saying the reason it's a walk in the park is because that muni bond that you bought is a collection of bonds.
The fund.
The fund is.
Yes.
So the index fund would be the same thing of stocks.
Yeah, but the muni bonds fund is only muni bonds.
Correct.
Muni bonds, and I know somebody's going to say I'm wrong because there have been very, very, very minuscule occasions don't fail unless you go to Puerto Rico. Muni bonds don't fail. They may go down. They're tied to interest rates.
Yes.
But at the end, you're going to get paid back. Okay. So I like muni bonds because I believe in the government. I believe in the municipality's not going to, fault on a debt. And 5% tax-free to me, like I said, it wasn't always 5%. When interest rates are really low, you're only getting 3%. Okay, so I'm upside down in some of those muni bonds, but who cares? At the end of the day, I get my money back, and it's tax-free income. But right now, if I buy a muni bond for 5%, in fact, I bought $1 million one yesterday, I know I'm getting $50,000 a year tax-free, and I could borrow up to $900,000 at like 3% if I want to borrow against it, or 3.5%. It works for me. It may not work for everybody else, but everybody's got to figure out what works for them. That's it. But, stock trading is something you got to be totally into if you're going to do it with real money. I used to go to bed at night and sometimes wake up in the morning and lose millions. And it would crush me. It would drive me nuts. I can't do it. I don't have the tolerance for that.
That's why I stick with index funds. You're not going to lose millions. You might be down the worst in a day. The worst might be like a few percent, 5%.
If you look at the bond funds, the combination of all kinds of bonds managed by a bond manager, that's all he does, of muni bonds, different grade levels, different classes, but they're never going to fluctuate more than 5%. And then they go up and down, but no more than 5%. You're never going to lose.
Do you have any real life advice for either Graham or I?
I mean, listen, if you have money that you don't you want to put away like what I call a war chest. You got to have a war chest. In case the bottom falls out or in case some super great deal comes your way, you got to be able to tap into something so you don't lose the opportunity. See, the biggest problem in life is that a lot of people get opportunities, but they can't execute it. That's the worst thing in the world. I've been in that position. A greatest deal in the world came up when I was younger, but I didn't have the money to do it. I didn't have the wherewithal to do it. You got to stash that money so you have the muscle, the strength, and it's always there to protect you. COVID comes, your hotel's empty. What do?
Here's a question for you. What percentage should you have as a war chest? And does it matter, let's just say, if you have margin?
I think you should definitely stash as much cash as you can. All right? You always got to have enough money to pay your bills and live. But besides that, I mean, and it could be in investments like your index funds. Whatever it is, you got to have something liquid that you can access like that. You never know when you're going to need the money, whether it's for emergency, whether it's an opportunity. You never know. You gotta stash
So is it
your
like
cash.
10%, 20%, 25, 30?
As much as you can. As much as you can. Now, me, I spend my money on real estate, a lot of it. So it's a different story. I might have, whatever, a couple $100 million in real estate, a couple $100 million here, a couple $100 million, whatever. I mean, I'm more diversified because real estate's my profession. But everybody needs to have something put away for that rainy day.
Graham is saying how much in cash for someone like Graham, who has a diversified portfolio in index funds and stuff like that.
Nothing should be sitting in just cash.
Well,
No,
cash
but like
equivalents, muni bonds.
tax-free muni bonds.
If it's invested in something that you are comfortable with and you're happy with the return, that's good enough.
So I'm 25% tax-free muni bonds. The rest is real estate
That's up
and
to
mostly
you.
stocks.
Everybody has different risk tolerance. I don't need to have a risk tolerance. I don't want risk. That's why I lean towards muni bonds. I mean, I don't need to worry about really growing. I made enough money to last me a lifetime. Now I got to figure out how I'm going to pass it down to my family and generations, So, it's whatever you're comfortable with where your money's at. Me, I just happen to be a big believer in muni bond funds and muni bonds because I like the comfort of the safety and knowing when I go to bed tomorrow, even if you look them up in the worst crash possible, they're not going to go down more than 10%. As the total hits the fan, okay? Even when interest rates go way down, which ain't going to happen again, they're still not going to crash. It's still valuable because the government's going to pay back that loan or the state or the county or the city or the hospital or whatever. Everybody's got their own, taste. My taste is being safe. I have a little risky, I let 𝗪𝗏 play with, but they've turned out good. Main thing is my focus is real estate. The point is, make as much money as you can and stash it away in things that aren't risky or too risky, But if a real estate deal does come your way, you want to be able to run that cash and snatch that real estate up. If you know you're going to make money on the real estate. That's what I do.
And really quick, I gotta say, something that Jack and I have been trying to do a lot more lately is just to remove the annoyances that quietly waste time and energy, because those things add up fast. The thing is, we're always on the go, we're always trying to get to the next thing, so having a cleaner setup and a little more control in your day really goes a long way, and that is exactly why we absolutely love MagBack. The MagBack Elite case is so much more than just a case. It has the finger loop for a secure grip, side grips that feel great, a pinky pillow for comfort, and a built-in kickstand when you need it.
That is all built to make everyday use way better. And it also just comes with a screen protector, so that's one less thing that you have to worry about.
Then they also have their MagBack 3-in-1 home multi-charger that keeps everything clean and ready to go. You drop your phone, AirPods, and Apple Watch on it at night, and by morning, everything is charged in one place. What I really like about this is that it's not just like a mess of wires that looks awful. I don't have to try to plug and play and which one does what. It's all in one place, and it looks incredibly clean, and it just makes it easy.
I kid you not, Graham and I are genuinely huge fans of MagBack. I use use their wallet, I use their phone case, and also on the side of my Tesla screen, I put my phone up there. It is so helpful. Check it out with this footage. I can guarantee if you're on Apple or Android, they have something for you. So if you want to make your setup cleaner and way more efficient, definitely check them out with the link down below, and don't forget to use our code, which is also down below.